Hey guys, Stock Saturday, and it's a bit of a red week for me. Down about 7.3%, I think, or about £24,000. Yeah, underperforming the market. Looking at the S&P, it's down, up 0.27% for the last week. So very small, sort of pretty much flat gain. Similarly with the Nasdaq, sort of dropped during the week and rose back up 0.5% over the last 5 days. So yeah, it's sort of doing better than me at least. Seen some sort of fairly big losses in the crypto miners, of course. CleanSpark and Riot both down sort of double digits for the week. And Stellantis actually down, I believe, about 11% for the week. Results, as we will come to, not looking quite so good. Although I did receive the big sort of once a year dividend, up from last year. I think last year it was about £750. This year it was £855. So cushions the blow, if you like. Be putting that money elsewhere, most likely. And yeah, some sort of losses on other stocks. Broadcom not doing quite so well. Taiwan Semiconductor sort of up and down. Had sort of big rise on Friday. Vanguard Emerging Markets is sort of trickling up now. £781 in the green, was sort of at a slight loss not so long ago. China sort of pushing that up from the looks of it. Similarly with Prosus, gone sort of back to 10% in the green. So yeah, not all bad. Just looking at some news though, CleanSpark released their operational update for April. So this is the first one since the halving, but of course the halving was 21st of April. So the May one will sort of give you the full picture of post-halving numbers. This is only sort of 1 week, or just a week and a half. So 721 Bitcoin mined, that is quite a bit. Obviously that'll be sort of a good couple of hundred lower next update. But 5,739 Bitcoin held on the balance sheet now is very, very high and getting towards Riot blockchains or Riot platforms total. So that was sort of something I was seeing as a big positive for Riot platforms, sort of having around double the Bitcoin of CleanSpark. And yeah, they're sort of closing that gap, certainly. They sell 2.88 Bitcoin, so not interested in selling very much at all. Current hash rate is 17.3, so it is very slowly rising, whereas Riot are sort of in full expansion mode. They have said the Dalton expansion is sort of ongoing, although this is only a 0.8 exahash expansion. That'll take Dalton to 2.4 exahash, but this is installing the new S21s in Dalton, so very efficient and bringing their total joules per terahash down. So all good, but they are in sort of cache mode now rather than sort of building mode. Obviously, they are going to be looking for facilities or companies to buy, whichever they choose to do, to deploy the rest of their S21. I think it was S21 Pros. They've said upgraded. So yeah, we'll have to see what they do. Looking at Riot platforms then, so this isn't the April operational update, that hasn't quite come out yet, probably come out either today or Monday, but this is their Q1 results, so a little out of date. Always sort of chuckle with Bitcoin miners and people like that, the Q1 results are already quite a bit out of date, but yeah, they're sort of forecasting, obviously, the rise to 31.5 exahash, low cost. The cost has risen quite a bit from last year. This is sort of due to issues with some of the rigs they've noted before, and slightly rising cost of power, 3.8 cents per kilowatt hour. This sort of varies with how much they're able to curtail and how much they get back. But yeah, cash balance 688 million. Again, that might change in the April update, and sort of Bitcoin held will have gone up since then. So they show you here the split in costs just since last quarter. So it's up from 12,413 in power costs to 16,764. That's not their power per kilowatt hour increasing. That is the network difficulty. So we've gone from 475 exahash to 568 in just one quarter. So that obviously has a large effect. Other costs have increased from $1,200 to $6,270. That is sort of direct labour, miner insurance, and then equipment repair and that sort of thing. So they are expecting this to be maybe not one-time costs, but it should reduce over time. So they have been using their at-the-market offering dilution recently, although they are still saying this is for post-2025 expansion. They're saying the growth plans through to the end of next year are fully funded. They have 688 million in cash, and the Bitcoin balance, which you would sort of hope they're not looking to sell. They're saying sort of between now and the end of 2025, they're expecting to sort of produce this amount of Bitcoin. This depends on the Bitcoin price, of course, how much they spend mining it. But then the expansion to Rockdale and sort of replacing miner purchases, replacing the defective miners, and then the remainder of the Corsicana build out, they're saying will be sort of basically totally funded by Bitcoin production. So they're looking to sell sort of future Bitcoin, it's looking like, rather than hodl it. But that also means they shouldn't need to dilute too much at all to fund this, although they are diluting, they're saying, for future growth, so beyond 40 exahash. There's not really that much to look at in the income statements and things, because I will be putting this into my model, but sort of revenue and various things that they're doing, markdowns and changing the fair value of Bitcoin and all that sort of thing, just completely throw off net income and that sort of thing. They're showing 211 million gain in 211 million in net profit. That isn't really net profit to me. But yeah, I will be putting all of these figures into my model, and maybe I'll do an updated video on CleanSpark and Riot together once I've done those. Interest income, they're showing 7.8 million as opposed to 3.8 million expense in the 3 months last year. So this reflects the large cash balance, which is pretty good. And then shares outstanding, so that's average, but looking at the balance sheet, they're saying common stock 268 million, and then a few million of preferred stock. So yeah, the shares outstanding is higher than what I had before. I'm having to probably up that to 300 million, I guess, going forward, if they're still going to be diluting. It's still debatable what that dilution is for, but we'll have to see. And then, yeah, we know sort of cash and things on the balance sheet, no particular amount of debt, and yeah, property, plant and equipment increasing as they build. So moving on to Coeur Mining, they have sort of released a not particularly impressive set of results. It was sort of in line with guidance. So they're saying $151 million of gold sales and 61 million of silver. So this is down from last quarter, but that is sort of expected for Q1. Sort of the weather and all sorts, and they're still waiting for ramp up of their expansion. But yeah, compared to Q1 last year, gold is quite a bit up from the increased gold price, and silver is sort of pretty flat because silver has been barely moving. whereas costs obviously up a fair bit due to inflation. So it is unfortunately still a net loss, 8 cents per share net loss, even adjusted. So yeah, that's not ideal. Weighted average shares outstanding consistently up, although that should start to slow now with the expansion sort of largely complete. EBITDA is sort of up a reasonable amount, and adjusted EBITDA sort of up a little bit down from Q4, but again, sort of Q4 is a bigger quarter, well up from last year. Balance sheet wise, they're sort of looking reasonably strong still. Total debt is relatively high, but for what they should be producing the next sort of couple of years, I think that's fine. And cash is sort of still fairly low, 67 million, but yeah, not horrendous. This is based on sort of $1,864 realized price for gold, so that is a fair bit higher, although they are hedging quite a lot, so that's not ideal. You might need to sort of look at the later quarters once they're hedging a little bit less and we get that sort of realized price coming up. Again, 23.57 on silver, so not ideal, and sort of would rather they weren't hedging quite so much, because they're not going to get the benefit of the higher prices. So obviously Q2 we've had significantly high prices, and they're hedging 50,000 ounces of silver. So you know, producing 80,000, they're not getting the benefit of the high gold price for 50,000 of that. They're hedging at $2,100, and sort of Q2 it's looking like could be an average of sort of closer to 2,300. Silver again, sort of 1.8 million hedged, although that's at 26, so unless it rockets up, that's not too bad a price to be hedging at. And the guidance, they are sort of maintaining that, so 310 to 355,000 ounces of gold, and 10.7 to 13.3 million ounces of silver. So that's not too bad. Looking at sort of cost-wise, they're looking at sort of between 1,000 and 1,300 for the cheaper mines, and then Kensington sort of is their slightly higher cost mine, and the silver side sort of 14 to 1750 overall. So yeah, not horrendous. Pretty good price for silver, sort of all-in sustaining cost if they can, well, costs applicable to sales. That's not all-in sustaining cost, but yeah, not too bad if we can have start to have a bit of a run for silver, and they're sort of doing, you know, maybe 12 million ounces. They should get some love for the market for being more silver focused. So why did Stellantis drop then? They've released their Q1 revenue and shipments, and it wasn't particularly good. They've sort of citing various reasons for this: production actions, inventory management to prepare for a new product wave coming in half 2 24, compared with sort of Q1 last year being particularly strong. So yeah, not horrendous, but you know, combined shipments down 11%, net revenue down 12%, so 41 billion euros, partly due to FX as well, although they're putting the price up and sort of obviously selling less cars. So they sort of show here volume is down, fair enough. FX was sort of slightly worse as well, but 1.2 billion increase due to putting the price up. So yeah, it's not the end of the world, but market obviously wasn't particularly happy with this. Should also obviously note the ex-dividend and dividend payment has been this month, or in the last month, so that has obviously dropped the price a fair bit. Looking at their broken down sectors, North America is sort of down. That's obviously the biggest revenue generator. And then enlarged Europe is down, not quite so much. Sort of shipments down, revenue down a little bit more. That's sort of they obviously sell a wide mix of cars. So yeah, the more expensive cars are coming down a little more. Middle East and Africa is actually up 42% on shipments and 24% on revenue. Again, they sort of selling into countries like Turkey and places like that, so FX has quite an effect. South America, shipments down 7%, but net revenue almost flat, so that's not too bad. China is down 46% on consolidated shipments. I think China are long term going to be buying their own cars. That is sort of obviously a concern. Stellantis sort of, I guess, benefiting as far as some of the car makers go, that they've never really sort of had a huge exposure to China, so they're not feeling the pinch like sort of BMW maybe and VW Group are having large exposure to China. Net revenue down 50% in China, so yeah, not ideal. Maserati as well is sort of very, very volatile. The sort of volume of the Grecale and Levante is down. So, and sort of inventory reduction initiatives. Again, I wonder if that's just painting a positive light on things. But yeah, shipments down from 8,000 to 3,000 is not ideal. Revenue down from 700 million to 300 million euros. Again, slightly due to FX, but that's making very little difference. So they're wanting to reduce inventory to get these new cars on the forecourt. So 1.459 million total units last quarter, down to 1.393. Although you compare sort of year on year, March 2022 they had 807,000 units, but sort of pre-pandemic. That is March 31st, 2020, 1.839 million units. So it's still way down from then. And order book remains steady at 3 months of sales. So that's smaller than a lot of people would like. You sort of get companies like ASML with like 2-year order book, but I don't think you're going to get that with a car maker. And they always give this sort of fairly woolly, supportive revenue backdrop as far as guidance goes. Double-digit operating income margin, adjusted, and positive free cash flow. So you would kind of hope that. But yeah, markets didn't seem to like this. So we'll have to see sort of how it goes going forward. I do keep an eye on the sort of EV sales month by month, and they're sort of not looking too bad, not great. VW still doing a lot, BMW and Mercedes still doing a lot, but they need sort of more products like this, the E5008, because everyone likes big cars these days, it seems. So looking at economic news, there was quite a bit come out this week. Tuesday we had EU provisional inflation and GDP figures. Sort of inflation slightly higher than expected, although down. So core CPI at 2.7%. A lot of people would be fairly happy with that. Sort of US and the UK are quite a bit above that. Headline was sort of flat at 2.4%, but again, most countries are aiming for 2%, so that's not the end of the world. GDP slightly up, quite a bit more than last quarter, and slightly higher than expectations. Sort of quarter on quarter, 0.3%. So yeah, not too bad. Employment costs a little bit higher than expected, but I think they would take that for a set of results. Nationwide house price index for the UK, slightly worse than expected, although that's been all over the place. Non-farm ADP non-farm payrolls was slightly higher than expected, but as you can see, this does change. Some of the sort of ISM numbers were a bit of a mixed bag for sort of manufacturing. And then we had the FOMC meeting, was sort of a bit of a nothing really. Obviously they didn't change rates, but they sort of didn't really say anything too sort of notable, sort of quashing any thoughts of a rate hike, but saying that they need more data to even think about cutting. So it's just higher for longer, I guess. Although he was sort of in, detailing scenarios where they might cut. So that was quite interesting. Fed balance sheet coming down, continuing to come down. They are saying that they're slowing this reduction in holdings. So that you could see that as easing. Market seemed to be sort of fairly happy with that. And then we saw the proper non-farm payrolls. I say proper, it's a load of rubbish really, but everyone sort of focuses on it. It was worse than expected and much worse than last month, although they revised this up slightly. So 175,000, not great. Average hourly earnings worse than expected, and both worse than last month. And unemployment rate was slightly higher. So wonder whether Jerome Powell sort of gets these numbers beforehand, and maybe that affects his FOMC meeting. But if not, I guess he'll see this as a load of weak data, and yeah, maybe they should sort of reconsider cuts a little bit sooner than expected. The ISM data as well, the non-manufacturing PMI has been sort of above 50, which sort of above 50 is considered expansion, and that's dropped below 50 unexpectedly. So yeah, not great. Non-manufacturing employment down at 45.9 as well, sort of quite a bit below expectations. So yeah, whether this will sort of have any effect, maybe if you see other members speaking or Powell speaking in the next month before the next meeting, he might comment. So portfolio-wise, probably will put the Stellantis dividend into the ISA and maybe buy something. I'm not 100% sure yet. Did sort of see a bit of a drop in Riot platforms. I think it came down to single figures again, just slightly under $10. Did sort of consider buying that, but yeah, didn't in the end. But these are both down sort of double digits, as I say, for the week. Gold and silver miners down slightly with this sort of consolidation of gold around $2,300. Sort of seen this as a bit of a good time to buy the options, but I do have to buy something in the ISA, so I will consider that as well. Looking at Pan American and KGHM, sort of barely moving really. Pan American's down a bit with the gold and silver price drops, but I think this is fairly temporary. And yeah, on the options side, I should say Chinese tech sort of pushing up a little. I think this is largely due to quite a good deal of buybacks by these companies because they all have a lot of cash, and China, I think, are encouraging buybacks. But yeah, on the option side, I did add £2,000. Sort of still seeing this as whether I'm throwing money into a black hole, I see this as the best sort of risk reward. Although I am going for basically end of 2025, sort of January 2026. So obviously, as the months roll on, this gets less and less likely, but that does mean you can sort of get reasonable prices, and I still think it's going to do well by the end of next year. So I have been adding an awful lot to Equinox. That was really the only one I've been adding to, but yeah, it's sort of, that's why I'm not in a particularly big profit, because I'm averaging up. Most of these sort of are now 20% higher prices than my average on Equinox. So yeah, we'll have to see, but looking interesting, I think. CleanSpark and Himax sort of not doing particularly well. Kua Mining sort of hovering around where it was, slightly coming down, but yeah, not really looking to buy any of the others. I am sort of keeping a close eye on Himax news and sort of maybe wanting to sort of buy a little bit more, but their results come out next week, so we'll have to see what that brings. So yeah, not too much going on, bit of a red week. Let me know how you guys are doing. and like and subscribe. See you soon.